Bill Smead, one stock you like in the Smead Value Fund is Gannett. Clearly there's going to be a lot of spending on campaign commercials with the election underway. But is that all there is with Gannett, or is there more to why you like it?
Well, first off, you're absolutely right. Every 2 years there's going to be enormously more spent, and they'll get their fair share of that. We like it a lot for other reasons as well. Retransmission fees from the cable companies and the satellite companies only are going to go up in the future. Secondly, they own all of Cars.com. They own 46 network affiliate TV stations, so they are the advertising vehicle of choice for local auto dealers. So for example, Warren Buffett just bought Van Tool, a major auto dealer, and thinks that's a great business to be in. Why? Because a ton of millennials that don't yet own cars are going to get married, have kids, and need cars that fit car seats, and those local auto dealers are going to advertise a lot.
And you're also bullish on Bank of America. So are they done paying their fines already and are ready to get back to business?
All you need is for them to pay less fine each year for your earnings to grow, right? The less drag that is each year. If it all disappeared at once, they'd have an enormous increase in earnings. We love the banks. First of all, they appear to be the most hated industry in the S&P 500, most polls. Secondly, that means you're paying a lower price to book and a lower price earnings ratio. And then thirdly, their moat has widened substantially. They have a disordinately large part of the deposits in the United States, and when the millennials go to buy houses and cars and borrow money to do it, they'll get a disproportionately large part of that business.
And you're positive on Cabela's. So will people spend that lower gas dividend on bows and arrows and guns at Cabela's?
Well, it's anything outdoors. They're the world's foremost outfitter. So everything from camping and fishing and hunting and anything related to being outdoors, they are a great brand name, and they have a bit of a cult. Their customer base is a great cult of people that love it the same way people would love something like a Whole Foods in that same kind of way. And the key here is their credit card business is the most successful credit card operation attached to a retailer in the United States of America. It produces half their profits. So every time they open a store in a new area of the country, they pick up a whole bunch of credit card customers. And here's the weird thing. Only 5% of the charges on the Cabela's credit cards are at Cabela's. You see, whoever the person in the family that loves the outdoors gets 2 Cabela's cards, gives the other one to their spouse and says, buy everything on this card. And then they go in and get a new fly rod, a new hunting rifle, a new tent, or if they've spent enough, a new boat, and use the points to reduce the price.
And then finally, you're bullish on Amgen. People have been worried about biotech valuations, but this one is not very highly priced, not a big multiple there.
Yeah, it's kind of bizarre actually. Their earnings have doubled in the last 4 years. They went from no dividend to $3.19. Their stock has tripled, and instead of getting popular and people crawling all over it the way a number of the more popular stocks, they traded a little less than a market multiple right now. So the answer is it's a bit of a show-me stock. I think people are wondering, can they grow their earnings after doubling them the last 4 years? Can they continue to find new products? Well, they spend 18 to 20% of their revenue each year on R&D and generate massive free cash flow, buying back their stock, et cetera. So the answer is the chances are pretty high. If they do, we think that maybe in 5 years the earnings number will be higher, and they might end up getting kind of a glamour 20 multiple out of the deal.
All right, thanks a lot, Bill.
Thank you. Pleasure.